Hey, good morning. This is Meir Valensky with Driving Markets. Hope you're well. Good morning. Okay, so just quick caveat. Anything said in this piece is not advice, not investment advice. I'm not a financial advisor, not an investment advisor. And anytime you trade, it's on your account. Your money belongs to you. And if you make money, great. If you lose money, that's not the intention. Okay, anyhow, let's get going. So the markets yesterday were up again. Remember, on Wednesday the US raised interest rates by 75 basis points, but Jerome Powell said that he doesn't think there's going to be a recession, and that indicated to the market that they're going to be less aggressive in raising interest rates if they're going to raise them at all, because what they're really concerned with is that they believe that there is going to be a recession. By saying they don't believe there's going to be a recession, they actually believe there is going to be a recession. Work that one out. And they're going to reduce the aggressive tactics of raising interest rates. That's my opinion. Okay, let's go a little bit more into detail on that. Looking at the macroeconomic picture and looking at the war with Ukraine, Russia, the supply chain, China's gone to another lockdown, by the way, because a variant has gone and hit the home city where Corona started. You've also got other major supply chain issues with shipping, etc., and they believe, or Jerome Powell thinks, that inflation's under control, and investors short term, for some reason, are delusional, thinking that that inflation is under control. Totally not true. Inflation is likely to go higher over the next month or two. It may drop due to the fact that oil has come down from $140 all the way down to below $100 a barrel. But in addition to that, what you've got is a major supply chain issue, and the war is not helping it. Okay, right. So based on the fact that they're going to have a soft landing, or they believe there's going to be a soft landing, the markets went up. Bitcoin went up by, again, another 8-9%. All the cryptos went up by 6-7% yesterday, as investors are looking to take on high-risk assets based on Jerome Powell's statement that everything is hunky-dory and we're now going for the most amazing bull market. The question is, where will the liquidity come from for that particular bull market when you've got companies that are reporting pretty poor results? For example, take Meta. Meta failed on analyst expectations. I did say this on Driving Markets. I've been saying it for a while, that Meta or Facebook is the next Snapchat, likely to fall. Will it fall 88% from its highs? Well, it's fallen 50% from its highs so far, and I think, yes, I think it's got another 30% to go. I'm calling Facebook all the way down to $100 a share. I think the company is going to struggle with its advertising revenue because it's totally dependent on advertising revenue. Last night, Apple came out and Microsoft came out and they beat analyst expectations. That's boosted up the Nasdaq again, because again, what they're looking for is where the companies are going to be strong in their results. I think over the next few months, you're going to see a much tighter and tighter market, and more difficult for these companies to make any money and maintain their margins. So the retail sector is going to be hammered, which we've seen in the States and across Europe and in the UK. You've got companies like the giant high-tech companies that one way or another will either cut back staff or do other cost cuttings in order to make a bigger margin and produce better results when they come to report. However, you've got to look at the gross revenue and the gross sales when measuring a company. Regarding foreign exchange, the dollar is weakened a little bit against all major currencies, because as there is an appetite for risk, there's a movement from a safe haven like the dollar over to higher risk assets, whether that's the pound, the euro, or the yen. Looking at the yen's come off, the dollar yen's come off from 138.5, 139, all the way down to 134.5, and could go down to 132 short term, as less interest in the dollar and more taken on risk on other currencies. The euro is hovering around the 102 level, but I still think it's going to test the one-on-one, the parity. It already has done that, and it's going to sink to around about the 95 to a dollar level, 95 versus a dollar. So it's 95 cents, euro cents to $1. That's how I see the euro dollar. As far as the pound's concerned, I'm a big fan of the pound. I think it's actually going to go back up, not necessarily immediate short term, but near term over the next 3 to 6 months. I would expect to see the pound back against the dollar cable at about 135. So something there to watch. overall, my view is I think inflation is going to continue rising. I think Jerome Powell's got it completely wrong in the Fed. I think they're well behind the curve. They really don't know what's going on, and they made a big mistake. And when it comes to the economies going to recession, they're going to be too slow in resuscitating the economies. That's my view on the markets. This is Meir Walensky, Driving Markets. Have a beautiful day and have a lovely weekend. All the best.